Welcome back. We are here for another episode of
The
the
real estate keys.
Keys. I'm yours truly, John Johnson, Johnson Signature Group from Exit Platinum Realty in Montclair, New Jersey. We sell the state, and my cohort is.
Joe Falla. Joe does mortgages. NMLS 1925079. How's everyone doing today? Welcome back.
Welcome, welcome, welcome. And let's see. We had a Fed hike yet again. It seems like every 4 or 5 episodes we're talking about a Fed hike, but that's because we're still battling inflation. Yet, I think yesterday I was watching TV and they said the economy is bouncing back pretty well, so we might avoid a recession. However, we
It's a
just had a
soft
Fed hike.
landing. Soft landing. Soft landing.
That's a good term. That's a good term for it. A nice soft landing. Um, so Joe, with all that that's going on,
I
can you
was listening to
break?
my stock podcast in the morning, and they said, "Why are these meetings coming up like every other day now?" He said that's because no one
Yeah,
really cared about them. CPI this, employment index this. No one really cared about any of this before. Now, every 3 days, there's some sort of Fed announcement, some sort of CPI information every week. I think it's just to keep us nervous,
it's
just to keep you
always
nervous and getting your
something.
eye off the ball.
Always something, man. Always. What are the rates looking like with all
I'm
this?
going to pull that up right now, my friend. Again, as usual, I'm not quoting anyone's rates or my rates. The lender you may have spoken with yesterday, this is just an average of the different types of loans that are out there: jumbo, your VA, your FHA loans, conventional loans, 15 years or ARM. So this is just to give you an idea of where the rates are, and you can use this as you're watching the show along with us week by week. I hope you can see that the rates have been going down. They have been going down as they've been predicting since the end of last year. Where they're going to land, no one really knows. No one really knows where they're going to land, but hopefully it's going to end up in a favorable position for all of you 2023 buyers.
Okay.
So that's the rates, John.
Okay. Awesome. So we still got buyers out here. We're always trying to bring tools to the table in regards to financing, grants, down payment assistance, all that stuff. But you got something that just hit the horizon. Um, that's pretty intriguing.
Yeah, so a couple of weeks ago, we here we go. Where is this thing? Oh, here we go. Here we go. Here we go. We talked about the New Jersey HMFA down payment assistance. Sorry for the little, I don't know, we got a little technical difficulties there with the brick in the wall. Um, right, we talked about this program here where here in New Jersey you can get up to $15,000. There are income restrictions for down payment and closing costs. More towards your closing costs, I'll say. Right, it does have restrictions. It varies on the county that you may live in, area incomes or DTI restrictions, all that good stuff. If you want more information, 908-669-9091, DM
Mhm,
me on all social media platforms, right?
mhm.
So that was one program that we talked about. I know we were talking offline, John, and you were asking me, are there any other programs out there that our viewers or national viewers, local viewers could be having us could actually, what the hell is that? Oh my Jesus Christ. what, what is that, John? What is that?
Chenoa.
It's the Chenoa flying in room at the right time. So there is another program out there, John. This is not a new program. It's been around for I don't know exactly. I think they've been around for about 10, 15 years. Um, it's actually not an it's not a conventional down payment assistance, right? Where it's forgivable. The Chenoa programs they're actually lenders that work side by side with banks like my bank, right? So,
Okay.
um, so basically, that's what we're going to talk about today. The Chenoa mortgage closing costs means the right term. Assistance for down payment and closing costs. That's what the Chenoa Fund is all about.
Okay, so it's a fund or is it a lender? I'm just trying to understand.
They're a bank. They're an actual bank. If you guys Google it, you go to ChenoaFund.com or .org off the top of my head.
Okay.
They're actually a bank. And again, they work side by side with other lenders like my bank and banks and see. It's national. There's only one state that they don't offer this program in. Take a guess which state that one might be.
Well, it
So
can't be
dumb.
New Jersey. It better not be New Jersey because we
It's
can't
New
call that
Jersey. If you're headed to the where's the Super Bowl this year, John?
Arizona, man.
Arizona. They it works in Arizona. It works in Arizona. What are the two teams that are going to the Super Bowl this summer, John? I
There's
mean, this
only
winter.
there's only one
Only one?
that's going.
Oh,
Do
okay.
what they need to do.
You mean coming home with the trophy?
They're going to Arizona to pick up some hardware and they're coming back. And they're from Philadelphia.
And who are they playing? I really don't know.
The other team the other team, no one really cares. Well, a lot of people out there care. I think Kansas City is coming out there to watch the Eagles pick up their hardware.
I gotcha.
Let's be clear.
Are we
Okay?
going to be doing the time dance over there?
The next
It's called the
episode
bird.
is dedicated.
It's called the bird.
That's right. That's right.
Shout out to the time. Shout out to the time, Mr. Morris Day. And Prince that actually wrote that song. So yeah, it's actually not available in one state, just one state, New York. It's not available in New York.
That,
right?
Too bad. Sorry to hear that.
Yeah. You're probably better off. But so like I was saying, no, it's not an actual down payment assistance per se, as we were talking about with the New Jersey HMFA program.
Mm-hmm.
It's a assistance towards that they can provide towards your closing costs and your down payment.
Okay, assistance for closing costs and down payment. Okay, so how much are we talking to go towards that?
The process is, well, the way they offer it is amazing, right? So you don't actually qualify for one or the other. They give the buyer the choice. They give you the choice. Okay. So it either can be 3.5% or 5%. It's just an FHA loan. This is not available for conventional loans, right? Conventional loans meaning higher credit scores, higher down payment. But you say, Joe, doesn't conventional start at 5%? Yes. So what they do is they will offer either the 3.5% or the 5% option, depending on how much additional funds you need for your down payment or closing.
Okay, so we're talking assistance in the form of 3.5% of the loan amount or 5% of the loan amount?
Of the loan amount, correct.
All right, so people, here's your master key. You have the Chenoa Fund, which is a bank that works in providing assistance to your closing costs and or down payment. However, that's at the discretion of the buyer, so the buyer can choose whether or not they wanted to go towards their closing costs or their down payment.
Right.
And they got two flavors of it: a 3.5% of the loan amount or 5% of the loan amount is used as part of the assistance. That's your master key. Okay.
So pro cons, right? Usually people start with the pros. Let's start with the cons because there aren't really much. So with the New Jersey down payment assistance program, right? We're talking to our Jersey buyers right now, right?
Yep.
It's a forgivable loan after 5 years off the top of my head, right? 5 years, it's forgivable provided you don't move from the house, sell it, or refinance it, right? We covered that. Go back on our YouTube channels, Instagram. You guys can see that us discuss that program in more detail. This program is non-forgivable.
Non-forgivable means what, John?
It means you do have to pay the full amount of the assistance that they're providing you over a 10-year period. It's a second lien or a second mortgage, a piggyback off your existing mortgage. So I'm just making up some numbers, right? We're just making up some numbers. House is X, right? $300,000. You decided to take 3.5%, 14.5. If you want to break out the calculator, John, would be the 3.5%. right? I think it's 14.5 or 13.5 off the top of my
Three
head.
300 and
300,
3.5%,
3.5%,
10.5.
10.5. Thank you, John. Coming in the clutch.
No worry.
That would be what you would be paying additional alongside your regular mortgage over a period of 10 years with interest. With
With
interest. That's
interest.
very, very important.
So this is a second lien.
Second lien on the house, a piggyback off your primary mortgage.
Okay. Okay.
And
Got
there
it.
is a rate and there's a different, there is interest on that as well,
Mhm.
right?
Okay.
So if your rate, let's say you're at 6%, right? That's where we qualify you based off your credit score, job history, and all the other stuff that's involved in your the pricing of the interest, right? The rate for the second mortgage is going to be 2 points or 2% more than your note rate, which is the rate that you're going to get qualified for in your primary mortgage. So it's going to be a 6% on the primary, 8% on the second lien, either the 3.5 or 5%.
Okay. So just to reiterate, two keys. Two keys. One, non-forgivable. Unlike all the other stuff like Joe mentioned, this is not a grant where you get it, you stay there X amount of time, it goes away. No. This is another loan on top of your mortgage you have to pay back, and it will be slightly higher in regards to an interest rate, as Joe mentioned. So Joe gave an example of 6% on your mortgage. This loan would come in at roughly 8% that you have to pay back over 10 years. Two more keys for you. Okay.
Absolutely. Now, the difference between the 3.5 and a 5, again, they give you the choice. You decide, right? So if you have, right, and every lender should be providing you, as soon as they run your credit, as soon as you make an offer on a house, even before then, right? I don't know, there's some guy out there that can sometimes give you the numbers that you're going, your tax, what you need up front for taxes, what your application fee is going to be, right? You should always get some sort of estimate,
Mm-hmm.
right? An estimate from your lender at the very beginning so that once you make your offer, you're not getting, now they're telling you, well, it's $25,000 you're going to need for closing costs. Well, I was assuming it was only going to be X, right? We never want to assume. Your lender should be providing some, not a loan estimate, but some sort of estimate of what your down payment and closing costs is going to be. So you don't have any sort of shock or sticker shock once you make your offer. And now they're providing you estimates, right? We're signing all these documents and all this good stuff. And you're looking at these numbers and you're like, where did all of this come from? Right? That happens a lot. That happens a lot, John. I'm sure you're well aware of that.
Major key here. I often, more oftentimes than not, with the exception of when you're doing deals with Joe, I have to circle back to my buyers and tell them, yeah, I understand the mortgage company you're using explain how much you have to put down, but there are other costs. There are closing costs. And a lot of times lenders do not go over the additional monies that they need or you would need as a buyer in addition to that down payment. Great point, Joe.
A lot of them assume. I was talking with an agent a little earlier, right before we went online, John, and there was a property that her and a client of hers were looking at putting an offer in. You tell me, John, not to get off on a tangent, but you tell me, John, they made their offer. They accepted the other prospects' offer, right?
Mm-hmm.
This was late November, early December. And as of today, the property is still pending. They have not closed on that deal. New construction. I went through the house.
Okay.
Besides the basement that wasn't finished, John, why would a property be under contract for 2 months? Where are we? 2 months. Going on three.
Well,
I'm not saying anything about the agent or the clients, but to me, someone dropped the ball. A interest rate hike went up. No, someone didn't extend the rate long enough. Something happened. This is just goes back to what we're just talking about now. Doing your due diligence, or
Right,
making sure the lender's doing their due diligence.
right. And if the property itself is this new construction, if it has passed all inspections, the property has the certificate of occupancy, the municipality has
This is
cleared.
all right. This is all the stuff that
So
I
now
didn't
it's
mention. That's
falling
awesome,
back
John.
on financing. So now it's definitely falling back on the financing.
I'm thinking as the lender, it's the financing, but it could be the stuff you just mentioned.
Yeah, yeah. I mean, if the property is free and clear from the city, because a lot of times with new construction, that can hold up and
But why
closing.
isn't all this stuff just taken care of before you even put the for sale sign on the front of the house?
Well, a lot of times with the market that we had or that we're coming out of, people trying to get in before houses are done, because they want somewhere to live. They know there's low inventory, so people want to put that contract on there. Unfortunately, you know, the lenders may get a little antsy and start all the paperwork, knowing that perhaps this house is not going to be ready until April, but they want to get the paperwork started and all
But I
that.
mean, with the seller, right? Why can't the seller just go to the county or the municipality in the area and say, "Hey, let's make sure everything's clear, right? I can put my for sale sign on there. There's not going to be any issues once we get the clear to close. Once the bank gives us the clear to close, and you guys can come up with what is it? The C of O, the CTO,
Yeah.
CLO, something like that. What is it called again?
CO, man, CO,
A
CO.
CO. What's a CO?
In a perfect world, that would happen. A lot of times, it doesn't. There are a
What's a
lot
CO,
of
John? Just a little
yeah.
anecdote. What's a CO?
CO is not a corrections officer, people in the
Gotcha. See, I was totally confused. What in the hell is
real estate world. It's an acronym for Certificate of Occupancy. There are various variations of it. You have a CCC, the Certificate of Continued Compliance, certificate of um, certificate of I forgot certificate of
is that occupancy?
habituality. No,
Oh, is it? Okay. See,
yeah,
okay.
certificate of habituality. I have a problem with that word, habituality. But certificate of occupancy is most commonly known for when the township comes out to make sure a property is in safe living condition to pass off to one owner to a new homeowner. In the case of
Gotcha.
new construction, there may be a more intrusive inspection from the municipality because the structure was never there, and the town wants to make sure the property was built up to all codes.
Gotcha. Gotcha. So these are some additional keys, guys, for free that we're throwing in. I know we're talking about
Yes, sir.
assistance here, but just a couple of keys because this information is so important. This is the conversations that a lot of clients don't have with their lenders. They
Yeah,
just they leave it to say, well, these guys are the experts. You guys should be taking this information, writing it down when you go out and you've made your offer and we're in the process, we're in escrow. These are some of the questions that you should definitely be bringing up to your lender and your realtor.
absolutely. And Joe, um, what do you normally estimate percentage wise? What do you normally estimate percentage wise?
Everyone has a this is a great question. Everyone has a different rule of thumb.
Mhm.
I go with about 2.5% would be your closing. It can vary from one state. So every deal is not the same, right? Every deal has a different identity, different fingerprint, right? Why? Because it can involve flood insurance, where one property around the corner doesn't need flood insurance, this property doesn't. That's an additional cost, a monthly cost, right? Or something you're gonna have to pay out of pocket up front before we even go to closing. Taxes vary from one state to another. I'm sorry, from one house to another. Most counties have a tax rate. You guys can Google that stuff. And most you can get that information right off of Google. There's a lot of different factors, so it can vary. But the actual fees and prepaids themselves, they're all identical. It's the same. Title fees, upfront insurance, upfront taxes, title transfer. These are basically all the fees that you should be seeing on that loan estimate, right? Or there's a different term we use out there, kind of coming to mind right now, that you should be getting from your lender once you actually get back, the answer of what if you've been approved or not. You should be getting this stuff right off the top, which I definitely am a big fan of providing that information right from the initial conversation. Once I run the credit and I get the interest rate and I get the estimate of what that's going to be, I am providing. It's called a what was mortgage coach? We provide a estimate of down payment and closing costs, if you want to say it. It's a TCA, basically a total cost analysis. That's what you should be getting. I drew a blank there for a second.
Now, Joe, is that also included on what they call a good faith estimate as well?
Yes, sir. It is also called a good faith estimate.
Okay, and
Good
I
faith
normally,
estimate. Yeah, absolutely. Go ahead, John.
and I normally will tell my clients to be able to come up with not only your down payment based on the pre-approval, but an additional 4% to cover closing costs. Because I'm trying to paint the absolutely worst case scenario in it in case they need those additional funds. And if we find that, you know what, they may not have that additional 4%, then we kind of reach into our toolbox and we see what kind of grants they may be eligible for. Let's see if the Chenoa Fund might be something to kind of offset those additional monies they may potentially need. So never ever think that all you need is 3.5% or 5% or whatever percent down that you need to close on the home, and that's it. Because there are other closing costs, and we'll have an episode again to break
Rate
down all
locks.
those different.
We're gonna talk about rate locks. It's very, very important because
Mhm.
that's something that may come up where we're gonna go more deeper into it on another episode. But where you're good to go, Joe. All you said I needed to do was pay my appraiser, or maybe there was a reinspection for something that needed to get fixed, or in also my upfront homeowners insurance. But there is something called a rate lock, which is very, very important and can, especially on that deal we were just talking about, someone's going to have to be coming. It's going to come out of pocket for maybe up to an additional $800, John, because the person's interest rate that they got locked in on, it has a date and it may have expired.
Okay, so let's talk about that. You say locked in. What does that mean for our audience when you say locked in?
I'm not going to say this is, I don't want to talk out of term, but most cases, right, from my experience, most lenders have a rate lock period. It can be 30 days, 60 days, 90 days. I don't think we go further than that, right? What that means, if you've made an offer on a property, it shouldn't be done before then because you're losing out on time. Basically, extrinsic value for all my options traders out there, right?
Mhm.
So once you've made your offer, that's when your lender should be locking your rate. Essentially, they're going to say, Mr. Client, we're going to lock you in at a 5.75 rate. Your next question should always be, what's the cost? Number one. And number two, how long is that rate locked in for? Again, in most cases, it's going to be 30, 60, or 90 days. I normally go with 60 days. If we kind of get a feel where we talk to this is where important, where the communication comes in between all parties involved, the seller agent, the buyer agent, and the lender, right? What do we get? Are we getting a feel here? Do you think this place is going to pass inspection? Do we think there's going to be any permit? No, I know the owner for years. Let's say we're talking to the seller agent. I know the owner for years. We've looked at it. Inspection came back fine. Appraisal came back fine. I don't anticipate any issues, right? So we're probably going to lock you in for 60 days. As long as that deal, right, goes to closing within 60 days, you're at the attorney or the title company's office within 60 days, there shouldn't be any additional fees coming out of the buyer's pocket. Let's say we're headed to closing, right? Worst case scenario, we're going to closing and a pipe burst. No fault of the seller. They didn't do it. They didn't put any shady. Just happens up here in the Northeast, right, John? Happens a lot. Pipes will
Yeah.
just bust if you're
Yep.
not running the water enough, right? They'll
Yep.
just bust. Everything's halted. The seller goes out, say, no big deal. It just fell. We're going to clean it up, and we're going to have to most likely get an appraiser to go back out and reinspect the property, right? That's an additional fee because they're aware, the lender's aware of what happened. You know what I mean? Now, those additional fees, now we're going to have to extend the lock. And you may have even, if you don't pay for the lock, that was the point I'm trying to make. If you don't pay for the lock, you're going to lose that interest rate. Now, let's say Mr. Powell, in his infinite wisdom, decided to either lower or decrease the interest rates, whatever the case would be, and now the interest rate is going to cost you more. There is a cost, or the interest rate has actually changed since the day you locked it in on January 1st and today, February 2nd. We'll say 30 days have expired. You can normally just pay a fee to keep that same interest rate, or if you decide it's not my fault, I should have to pay it, and everyone starts going back and forth, we lose the lock. Now we're going to have to redisclose the entire loan and go with whatever the current rate is
Okay.
at that particular time. It could be lower, it could be less, it could be more.
Okay. So I
Rate
mean,
locks.
in a great scenario, if the rate is lower, you're good. You
Correct.
decide not to pay the lock. If the rates are going up, then you're kind of in a bad situation.
But I definitely would suggest, if the rates haven't gone down, keep the rate you have, pay the rate lock extension, keep just to keep everything, the flow going. Let whatever hiccup may have happened during the process get resolved, and you take it from there.
Awesome.
Real
Awesome.
estate key, real estate. That's the master lock for number 2 for today.
Yeah. Major. Yeah, that's a major key for sure. I mean, you ask what are your closing costs going to be, and you ask about that rate lock. How long is it, and how much could it possibly cost?
My dog agrees.
There
My
it is.
dog agrees.
Google. Google. The dog's also saying we're kind of ending our episode, but major key, was the Chenoa Fund, which is
There are
another.
there are a lot more pieces to it. Definitely a lot more pieces to it, John. But the best thing to do, as always, contact John, contact myself, and I will go. It's better to be thorough than to just go off information that you're getting off the internet. Run the application, get the exact numbers, get the process done. Let everyone make sure they're doing their due diligence on the process.
And Joe, how do they reach you for more information on this Chenoa
Again,
Fund?
908-669-9091. Or you can DM me on all platforms. Joe does mortgages. And John, how can they contact you?
908-338-0639, or you can Google the hashtag Johnson Signature Group on all platforms. Google it. I'm there. I'm here for you guys. And with that, it is a wrap. And thank you guys.
That's
Appreciate
this
it.
week, guys. See you next week.
See ya.